Amazon reported their full year 2023 earnings on February 1st, and the market seems to have improved, with the share price moving up $12. The last quarter, which holds the Black Friday and Christmas shopping periods, saw online sales increase by 9% from the comparable quarter. But revenue gains were across all business lines for Amazon, with full year results coming in at $574 billion, up 11% year over year. Gross margins improved to 47%, the highest since 2018. Operating income was $36.9 billion, much improved from full year 2022, where margins were lower and operating expenses jumped 23% compared to 2021. Net income came in at $30.4 billion compared to last year's loss of $2.7 billion due to the Rivian investment write-down. The market cap of Amazon is $1.8 trillion. Looking at the 5-year income statement data, revenue has grown by 15% in the last 5 years and 7% in the last 3 years. Gross profits have also grown by 18% in the last 5 years and 11% since 2021. Growth in operating profit has been 20% from 2019 and 14% in the last 3 years. And finally, net income has grown by 21% since 2019, but the 3-year rate is negative 3%. 2021 had the Rivian investment gain, and 2022 had the Rivian write-off. If you look at the business segments, we see North America continues to shine with a 5-year growth rate of 15.6%, finishing 2023 at $353 billion, and 8% growth rate on the 3-year basis. Their international business grew 12% from 2019 to finish at $131 billion, but growth has been flat in the last 3 years. AWS, Amazon's cloud business, has been growing at a clip of 24% since 2019 to finish 2023 at $90.8 billion. The 3-year rate has been 13.4%, slowing short-term growth due to post-pandemic where people are buying offline. Now the ratios. Outstanding shares increased by 303 million, or about 3%. Note that the shares are fully diluted. Earnings per share was $2.90. Sales per share, $54.80, up 8.6%, while cash per share came in at $7 per share, improving 32% year over year. Amazon has a large cash war chest of $73 billion. We will be watching to see what they do with that. Perhaps a special dividend, or start paying a quarterly dividend like Meta, or some other acquisition is likely on the cards. Share buybacks are also a possibility. Book value up 34% to $19.24. A stratospheric PE of 58.7, with the S&P at 500 at just 26.55. PE growth is negative 0.05. The leverage ratios are good. Amazon has a debt ratio of 0.11 and a debt to equity of 0.29. Not very much leverage there. Interest coverage came in at 12.5 times, the current ratio at 1.05, the quick ratio at 0.84, and the cash ratio at 0.44 show Amazon has good liquidity. Return on assets was only 5.8%, and return on equity was 15%. Return on capital employed at 10.2%, while return on invested capital was 11.7%. Low returns on a low margin business. Cash flow numbers look good. Operating cash flow was $85 billion. Investing outflows were $50 billion. Amazon invested about $53 billion in property, plant, and equipment. Financing outflows were nearly $16 billion, and free cash flow to the firm was $74 billion. Rather solid numbers. Amazon doesn't pay a dividend, or will they soon? We shall see. Enterprise value of the company is $1.8 trillion. This gives us a valuation of 3.08 times revenue and 24 times free cash flow. Market cap to net income is 59 times. Let's look at the guidance. They indicated for Q1 2024 that revenue will range from $138 to $143.5 billion, down from the Christmas shopping season. Operating income is expected to be between $8 and $12 billion. Our key takeaways on the pro side. Well, obviously there's good cash flow, and Amazon has lots of cash. All businesses are growing. Online shopping is growing and is here to stay. On the con side, the share price we think is too high based on its price earnings, twice the S&P 500 as a whole. The low margins of Amazon make it susceptible to net income fluctuations, such as we saw in 2021 with the Rivian investment boosting net income, and then the following year, the Rivian write-down, making a net loss of 2022. Amazon and its vendors are susceptible to supply chain problems, which we see could be occurring at the Suez Canal and Panama Canal, as fewer ships are getting through. We're giving Amazon a neutral rating. The company is still growing, but doesn't justify the share price. We can see on this chart that the share price is coming into a lot of overhead supply from 2021 highs, and we would be hesitant to buy in these ranges. We have no exposure to this company. Like and subscribe.